All right, what's up, tycoons? What's up, traders? Today's video, we're going to give a breakdown on KSM. All right, this is Kusama. We're looking at the daily chart. We're going to go over 3 things that you can use to help yourself find better entries and exits, and also really understand the price action. Okay, we're going to take a look at the MACD, the relative strength index, and then these 3 numbers right here, the Fibonacci's. We're specifically looking at the 61.8, the 50%, and the 38.2 retracement levels. That's using this fib tool over here. And you're going to learn a lot in this video on how to understand really, what a cryptocurrency is doing when it comes to the candlestick charts and how to better predict if something is in a downtrend or a reversal, right? Now, this works for uptrends as well, but it's no secret that it's been a very bear market, very bad crypto winter. So for the most part, everything has been stuck in a downtrend, and we're seeing healthy retracements for a continuation of a downtrend. All right. Now, when we look at the MACD, there's several sell signals that you can use to, get out of a play or protect your trade, protect your, investment with some sort of risk management. And then using the relative strength index, we're going to look at something known as bullish divergence. And that's going to teach you, some possible entries. Okay. So none of this is financial advice. It's more informational. And, you can use some of these strategies yourself as a beginner. It's not very hard. And once you get the hang of them, it will really give you that edge that you need when it comes to trading. Trading is like a battleground. It's like going to war. So you need the proper weapons, and you need as many weapons at your disposal. So that way you can increase your odds of success on the battlefield. So we'll get straight into the video. Smash the like button, subscribe to the channel if you guys are new, and we'll cover bullish divergence first. Okay. So it's going to be indicated by this circle right here. We have a low and then a lower low. Okay. So clearly this token is in a downtrend. But if we look at our relative strength index, which it measures the strength of a token at its given price. So what we've seen is at this moment where we have that low, we have a low right here. And then we actually start creating higher lows over here. And so we connect these lines, we see there's a divergence. We see that the token is in a clear downtrend, but the relative strength index is actually in a slight uptrend. This is a term known as bullish divergence, and it's an indicator you may see some bullish activity in the future. Now, from that bullish divergence, we ended up getting a nice little rally, about 42% at the highs. So you can never predict whether it's going to be a 5% move, 100% move, but it is a good tool that you can use for possible entries, right? And if we go over here to the past, we can take a look at some of the previous times we've had bullish divergence on the chart and understand what's going on. Okay, so right here, we can see again, we're in a downtrend. We're making a low and then a lower low right here. And then we have an uptrend on our relative strength index. That's that bullish divergence we just went over. And that ended up leading to a very nice rally. Okay, about 86%, 85% from the lows to the highs. Now, the reason we pay attention to these 3 levels on the fib tool is because these are our retracement levels to see if we're going to continue a trend. Okay, now in this case, it's a downtrend. So if we look at the past of the chart, right, we can see that clearly we're in a downtrend. So what we do is we're taking this swing high right here and connecting it to this swing low on the fibs. So now we see we have a sharp move to the downside. We get a healthy retracement, and then ultimately we get the trend continuation and keep going down. If this would have broken, okay, and held these levels and broke through, that could have been a possible reversal, right? And this happens multiple times on the chart. Okay, if we come over here and we take this swing high to this swing low, we see we have a sharp move to the downside, a retracement, and then a trend continuation. Now we keep getting rejected at the 61.8, the 50%, and the 38.2. Those are the 3 most common retracement levels that algos and other traders are going to be looking at. And it's really important to start using some of these formulas because a lot of trading, whether you believe it or not, is done by cryptocurrencies or is done by algos, especially in cryptocurrency. About 70% of the trading is fueled by algos. So now that we see that we have, established a downtrend, we keep retracing and continuing the downtrend, we have some more examples of it happening here. Now, what you can do is you can start to combine strategies together. Okay, so in this case, we're going to combine the fib strategy, our 3 main retracement levels right here, where we know that most commonly we have been seeing a downtrend, then a healthy retracement, and then a trend continuation. When you actually start to combine some of your signals together, in this case, we're going to combine the MACD, and we have a sell signal right here at this arrow. So this is when the blue line crosses below the orange line and starts trading below it. Now, this is a MACD sell signal, and it's usually followed by a sharp move to the downside. Again, no strategy is going to work 100% of the time, but you can have more confidence and help give yourself an edge when you're able to combine strategies and combine signals together. Okay. So at this point, if we go ahead and take out our measuring tool, what we can see is once we got that MACD sell signal, all right, we ended up dropping over 35%. Right. And what do we do after that? After that trend continuation, that drop, retrace, continue. Well, we actually retrace again and get rejected again at the 38.2. So now we're connecting the swing highs up here down to the swing low right here. And we're seeing we come down, get a trend, retracement, then ultimately a continuation. And again, we're seeing a MACD sell signal right there after the rejection of the 38.2 retracement level. We get another MACD sell signal, and it ultimately ends up leading to another drop. We can take out our measuring tool again here. And this is where we got our signal, and we ended up dropping over 50%. So using these strategies and again, combining them together is going to be really, really helpful. So now that we've established this and established some of the things that we're looking at, to truly understand what's going on currently, we have to combine all of our factors together. So we have the bullish divergence, right? Indicating that we could be seeing some bullish activity. We have our three major retracement levels right here, the 61.8, the 50, and the 38.2. And you can actually use the fib to get bullish price targets to the upside or bearish price targets to the downside. These are also known as support and resistance. But if you're trading these moves, then they're going to be price targets for you to either take profit at or enter a position. Okay. So we'll zoom in some more and we'll take a look, and we can see that, previously we had a MACD sell signal. Okay. But it's gone away. So we had the blue line cross below here, and now we actually see the blue line trading above the orange line. So that's a little bit bullish, right? That means that momentum is swinging more to the upside. We had the bullish divergence as well. So now we have two indicators to see some bullish activity. We already went over and took a look at how we're up. We went up about 40%. So the big question is, are we going to continue the trend of getting rejected at the three retracement levels, which has been happening over and over? We've taken a look at it. We come down, we retrace, and then we continue the trend. Okay. So the 50% retracement level, we've been rejected there 4 times, right in through here. 4 days we've been rejected. That level is 31.09. If we're able to, break out through that level and go something like this, okay, we have our 61.8 at 33.26. All right, so those are going to be the two main overhead levels that we really need to pay attention to. If we're able to break out through those, then we could be seeing a reversal, right, which would take us possibly up to 40.29. That's going to be our breakout level to the upside. If we break out past 40.29, we have two bullish price targets up here at 45.29 and 51.66. Now, to the downside, if we get the trend continuation and we get a rejection up here and keep heading lower, all right, there's 3 levels that I'm really going to be watching. Okay, it's going to be 21.85. That's going to be our breakout level. That's our most recent low right here, 21.85, and it's going to be the level to make or break. Right, if we come here, bounce, and break through it, possibly we're going to head down to 1683. That's going to be our bearish price target, as well as 1045. So hopefully you learned something new in this video that can help you on your trading journey. If you did, definitely smash the like button and subscribe to the channel. But don't forget, I also do viewer requests every week. So if you enjoyed this video and you want to see your ticker in the next video, all you have to do is comment down below, and I'll be happy to break down what I've been seeing on the charts and the critical levels that we're looking at to see whether we're in a downtrend or whether we're in the middle of a reversal and trying to go through an uptrend. I'll be happy to do that as soon as I can.